Good morning, everyone. Thanks for joining in today's session. My name is Angela Bilski, and I'm a municipal training advisor with Municipal Affairs. You've probably seen me here and there over the years. Helping me out today on the technical side is my best hired hand, Lucien Cloutier. Hopefully he provides some humorous quips and takes in the chat as we go, as he sometimes does. So before we get started, let me ask you this. If tax recovery were a rodeo event, which one would it be? Would it be calf roping, where speed and timing matter? Or maybe steer wrestling? Also quick, but requires quite a bit of force to tackle these stubborn tax arrears head on. Busting broncs. Maybe bull riding, a little wild and unpredictable. Is that why you mentioned that? So there always seem to be complex cases and unusual property situations that aren't addressed by legislation. So yeah, sometimes it can be a little bit unpredictable and challenging. So feel free to share your thoughts in the chat about that question, or just think about it as we go along. In any event, today we're going to make sure you've got the right gear to stay in the saddle when it comes to tax recovery. And the purpose of this session is to talk about the fundamentals of recovering property taxes on land and designated manufactured homes. This is an essential process for municipalities to ensure financial stability and fairness. Like I had mentioned, tax recovery can feel complex, but understanding the basics helps municipalities manage revenue effectively and maintain compliance. As you can see from the theme, rounding up revenue, we're taking a bit of a practical approach. Think of this as gathering the tools you need to rope in those outstanding taxes. I also thought a theme would liven up this less than thrilling process-heavy topic. It's also meant for newbies to the tax clerk role to learn the ropes, even though I just discovered learn the ropes is more of a sailing reference than a Western theme one. Now that we've set the stage, let's take a quick look at what we'll be covering today. Oh, there's a good one. Tax recovery should never be a spur of the moment process. Awesome. Thanks, Lucien. So we'll start with the legislative framework that governs tax recovery, as understanding the law is the foundation for everything else we do. Next, we'll define what arrears are and why they matter. This is key to knowing when recovery processes should begin. Then we'll look at the timelines for recovering taxes on land. These deadlines are critical for compliance and planning. And after that, we'll cover timelines for designated manufactured homes, or DMHs for short. These can differ from land slightly, so it's important to understand both of those processes. We'll share some resources you can use after today's session, such as templates, guides, and contacts to help you apply what you learn. You should have been sent some handouts this morning. If you haven't seen those, I'll ask Lucien to put a link into the chat again. And just fair warning, I've caught a couple of typos that I will be pointing out on the slide handouts so that you can correct them on your end. And finally, we'll wrap up with hopefully some time for your questions. Please jot them down or add them to the Q&A as we go. We'll try to separate the Q&A from the chat for your questions so we don't miss them. All right. Hopefully that works for you. I'll use something from my favorite podcast. Are you sitting comfortably? Then we'll begin. In this case, are you sitting comfortably in your saddle? Then we'll begin. All right, so first is legislation. So the purpose and intent of your favorite legislation and ours, the Municipal Government Act, or the MGA for short, is to provide for the operation of local government in Alberta. It provides a significant amount of municipal autonomy and flexibility and realizes that one size does not fit all when it comes to the 340-ish municipalities in this province with vast differences in size, type, location, and population demographics. However, provisions related to tax recovery are probably some of the most prescriptive or rigid of the Act, which is why this session will focus heavily on process. Municipalities rely on the collection of property taxes to provide services, to improve and replace their infrastructure, and to meet their financial obligations. The government of Alberta recognizes municipalities' reliance on property tax revenue to achieve these goals. So to ensure that everyone who is required to pay municipal property tax does so, the MGA establishes a process to ensure that a municipality can collect the taxes that are due. However, land or property represents a significant, if not the largest, investment for most Albertans. Accordingly, the MGA also contains provisions that protect the property interests of Albertans, including appropriate notification requirements and time periods to make payment. This is a legislated process. It is a must in the Act and provides very little flexibility to modify any of the provisions, unlike other areas of the Act where there is a bit more discretion in certain situations. It is something that has to be carried out and likely does not leave many tax clerks with warm fuzzies while doing so, especially in smaller communities. So on this slide, it shows 3 methods for tax recovery in Alberta that are provided for in Part 10 of the MGA. As I had mentioned earlier, we're just going to focus on tax recovery related to land and DMHs. We're not going to get into the 3rd method, but just so that you're aware, I'm going to just really discuss each of these. So tax recovery related to land is covered under Division 8, Sections 410 through 436. So this is the most common method used. It's specific to titled land, which may or may not have improvements on the property. And the process for tax recovery related to land can take up to 4 years to carry out. Tax recovery related to DMHs is provided for in Division 8.1, Sections 436.01 through 436.24. This method is used for DMHs situated in mobile home parks or where the owner of the DMH does not own the land on which it is situated. This process can be completed in 3 or 4 years. And then we won't be getting into the 3rd method in this session today, but it's important to be aware of it. Tax recovery not related to land is covered off in Division 9, Sections 437 through 452. This method can also be used for DMHs and should be used for business taxes, crown lease land, and some non-residential properties like linear and machinery and equipment. This method can be completed in less than 1 year and is completely different than the other 2. It is the least used. However, it's becoming more commonly applied in rural municipalities for machinery and equipment. So it's important to understand the types of properties that qualify under each method. So as we go through the first 2 methods, please do not hesitate to ask your questions or put them in the Q&A. And I've included in your handouts a blank table that's beneficial for comparing the 2 methods. So see if you can fill it in as I go through this material. I'm also going to mention a handy resource to be aware of is our Guide to Tax Recovery, which is found on our Municipal Resource Handbook website. And for those who haven't accessed this resource before, the link will be on the resources slide at the end. All right, so knowing the difference between current taxes and taxes that are in arrears is critical to understanding and applying the tax recovery provisions throughout the whole process. So let's look at what are current taxes. Simply put, they are taxes levied in the current year. Per Section 334 in the MGA, taxes are considered imposed on January 1st of each year, regardless of when a municipality sends out its tax notices or applies penalties. Municipalities can determine their own due date for their taxes based on their tax penalty bylaw. Some counties or MDs have a fall due date to consider the time when farmers have cash coming in from selling their crops, but I'm going to use an example of a municipality that makes their taxes due on June 30th by imposing a penalty on July 1st, which is quite a common timeline for a lot of you folks out there. So if someone doesn't pay their taxes within the 6 months after July 1st, the July 1st penalty is imposed. Those taxes would be considered unpaid. and more penalties may be getting added, but they are still considered current as it is still within the year in which they were imposed. As for tax arrears, Section 326 defines tax arrears as taxes that remain unpaid after December 31st of the year in which they are imposed. So as of January 1, those taxes imposed in the previous year are considered arrears. So this definition of tax arrears applies to the tax recovery process for land under Division 8, as well as for DMHs under Division 8.1, if that's the division used for DMHs and not Division 9. All right, any questions on that? So now let's look at the timelines involved in creating the arrears list. It's taken me a really long time to get my head totally wrapped around this concept, but I've found that drawing out the timelines helps me tremendously. So I hope you find this slide helpful for your understanding also. Once you understand this part of it, everything else seems much easier. So the first step is determining if a property is far enough into arrears to be added to the list. The legislative direction to prepare the tax arrears list by March 31st annually is found in Section 412. For tax recovery related to land in Division 8, properties make it onto the list if they are more than 1 year in arrears. Essentially, what this is saying is any properties that are 2 years in arrears must be put on the arrears list. So for this next cycle, beginning on April 1st of 2026, properties that have all of the 24 taxes plus the 2025 taxes owing must be put on the arrears list. So a simple rule of thumb here is this question. Since the taxes were imposed on this property, have they seen January 1st twice? If the answer is yes, then that property is added to the arrears list. So on this diagram, 2024 is considered year 1 and 2025 is considered year 2. The taxes on these properties will have seen January 1st twice and must go onto the list. Okay, I'm just trying to get my thing to work here. Okay, there we go. One very important thing to note here is that anyone who comes in to pay at least 1 year's of arrears on or before March 31st of 2026 no longer qualifies to be on the list. But as soon as the notification is registered, which is deemed to be April 1st, then all the arrears need to be paid to have that notification removed. So there will be a bit of a time lag here for owners that come in to pay up their account between the day that the list is put on in the mail for the land titles office and April 1st. So how can municipalities encourage people to come in and pay their arrears to avoid being put on the list? Prior to developing the list, a municipality may want to consider sending a letter to each affected property owner. So late January to mid-February would be a good time to send that type of notification. This isn't required in the Act, but it's more of a best practice and gives people a heads up. So this letter will advise the owner that their property is going to have a tax recovery notification placed on the title and that they can avoid this action from occurring by paying the outstanding amount of taxes that have been in arrears for more than 1 year, which for 2026 will be the 2024 taxes. This is because taxes must be in arrears for more than 1 year before the tax recovery process is started. If the property owner pays the taxes that have been in arrears for more than 1 year, year 1 would fall off this timeline and the property owner would no longer qualify for the arrears list. 2025 would then become year 1 and 2026 is now year 2, potentially to be added to the list the following year in March of 2027. Some municipal staff have told me that it's frustrating when certain owners will just pay the amount they need in order to stay off the list or to avoid auction. But but I call that maybe more so being savvy to knowing how the legislation works. If any affected property owners are considered farmers, please check page 2 of the tax recovery guide for information regarding notification to these owners under the Farm Debt Mediation Act. You may also wish to engage your legal counsel for these properties to reduce the risk of legal challenges should the requirements in this other act not be met. And it's not even necessarily farm property that you would have to apply this act. Like say if a farmer owned a property in a urban, like a town or a village, then I believe then this act would still come into effect, even though that property isn't a farm property. All right. Any questions on this so far? Again, this is kind of the trickiest stuff to get under into your understanding. All right, so let's continue to discuss the timelines, assuming the 2024 arrears remain unpaid. So section 415 says that all tax arrears must be paid by the following March 31st in order to stop the auction process. The amount that someone will have to pay is going to change during the time periods that follow throughout this process. So when the payment is made will determine the balance the owner has to pay to have the notification removed or and to avoid auction for further years. So for 2026, owners that have already been put on the arrears list that come in to pay off their balance after March 31st, say on April 15th of 2026. I think my slide said April 15th, 2027, but it should be 2026 if you want to make that correction. So that those folks will then need to pay the 2024 and 2025 taxes before they can be removed from the auction list. If an owner doesn't come in to pay after December 31st of 2026, for example, they come in on March 1st of 2027, they will also have to pay the taxes imposed for 3 years, those years being 24, 25, and 26. The earliest date the municipality can schedule the auction would be April 1st of 2027. So payment before this date would stop the process. All right, I'll do the next slide before I talk about the question in the chat. And then if the auction isn't scheduled until after December 31st of 2027, but by March 31st of 2028, which is still within the legislated timelines, an owner will now have to pay all 4 years of arrears in order to avoid having their property go up for auction. So in this example, the municipality has scheduled the auction for February 1st, 2028, which is quite late in the whole process cycle, but still within timelines. If the owner comes in to pay right before the auction, say on January 31st of 28, they would have to pay all 4 years of arrears. That's certainly a lot to absorb, but hopefully it's making some sense for everyone. And I have handouts of the full page versions of the those last 4 slides. So there's a question about people paying after the arrears list is sent into the land titles office. So you would have to send in a notification to land titles office that the people paid in time and that the certificate or the notification should not be registered on the title. That's the time lag I had mentioned earlier, the time between sending in the list and the end of March. All right, hopefully that answers that question. Are there any other questions at this point? Okay, so I have a few scenarios here just to apply what I just talked about. So in the first one, this fellow owes $908 on his 2024 taxes and $915 on 2025. He comes into the office on March 6th after receiving a letter advising he will be added to the list if he doesn't pay up. How much does he have to pay to avoid going on the list? Anyone want to put a guess in the chat? Okay, thanks. So yes, he just has to pay the 24 taxes, the 2024 arrears, to no longer qualify to be put on the list. All right, and I have a follow-up to that, dealing with the penalty amounts. So if there are penalties imposed on January 1st of 2026, which likely there would be, how does that factor into how much he has to pay? Does he have to pay the penalty of the 2024 taxes to no longer qualify? Okay, so the answer to that, it depends on your computer system, whether or not it can age the penalties back to the relevant year. So if your system has that capability, you could potentially, the $56 would be considered arrears, but if it can't, and if it's imposed on January 1st, it can't do that aging properly, then they would be considered current, so they wouldn't have to be paid. Hopefully that makes sense. So here's another one. It's similar, but this person comes in after March 31st on June 6th of 2026. How much do they have to pay before they can have that notification removed? So they would have to pay all of the arrears because the notification has already been registered. So they would have to pay both of those years. And same issue with the penalties. If your system can age the penalties, they might have to be paid as well. If not, the penalty would be considered current and not arrears. All right, and then one more. So this lady has arrears from quite a few years adding up. And she comes in on July 9th, 2027 to clear up the arrears after getting the copy of an ad showing when the auction is going to take place in September. How much does she have to pay here? Oh boy, Lucian. Okay, so in this case, how much she would have to pay? The 2027 is still current, so she would have to pay the first 3 years, which is $27.49, I believe, to get to avoid the auction from going ahead. All right, any questions, concerns? Again, if you understand these concepts so far, everything else should be a piece of cake from now on. All right, so let's continue to discuss the preparation of the arrears list and what happens after that. Okay, so let's start off with the timelines for tax recovery related to land. So when you have your arrears list completed, a designated officer, in most cases the CAO, must sign it and apply the municipal seal. Land title still requires the list to be sealed, even though any reference to a seal has been removed from the MGA. So now that your list is signed and sealed, what do you do with it? Of course, signed, sealed, and delivered, as the song goes. So 2 copies of the arrears list must be sent to the registrar of the land titles office. Once that list is received, the registrar places a notification on the certificate of title for the property shown on that list. Other common terms for this tax notification we sometimes hear are a caveat or a lien, but the term used in the MGA is a tax recovery notification. So this notification legally registers the municipality's interest in the property. The only way that the notification can be removed is if the municipality requests that it be removed. So the municipality must also post the list in a place in the municipal office that is accessible to the public during regular business hours. Maybe some of you keep that list under glass because sometimes people like to mess with it. But that's what I've heard, that sometimes it needs to be protected under glass. According to Section 412, the municipality is also required to send 1 copy of the list to the Minister of Treasury, Board and Finance for the unclaimed property program. And we sometimes hear that this step gets overlooked. So the tax recovery guide includes more information for this program if you'd like to read more about that. One important thing to note here is that the arrears list needs to be postmarked prior to April 1st when it is received by the land titles office. So if it's sent after that date, the notifications will not be placed on the properties in time, and it will set the municipality back an entire year in the process. And again, anyone who comes in to pay at least 1 year of arrears on or before March 31st no longer qualifies to be on the list. But as soon as the notification is registered, then all arrears need to be paid to have the notification removed. So the municipality is mandated to notify the persons who are liable to pay the taxes that the list has been prepared and sent to the registrar. This letter should be sent at the same time that the arrears list is submitted to land titles. And then on the right hand of the slide are a few other provisions to be aware of. So the registrar certifies 1 copy of the arrears list and then returns it to the municipality along with an invoice. So these registration costs can be passed on to the property owners per Section 413 and 553. By August 1st, the Registrar of Land Titles must also send a notice to the owners on the list, as well as any parties with interest or encumbrance on their certificate of title, that if the tax arrears are not paid in full by March 31st of the following year, the property will be put up for auction and the municipality may own it if it is not sold. Section 414 sets out that once the notifications are registered, no improvements on the parcel can be removed. The notification letter sent out by the municipality at the end of March should indicate this as well. Section 416 is available to municipalities if they know that a property is being rented out and want to collect the rent from the renter in order to apply it to the outstanding arrears. They must notify the owner 14 days before the notice is sent to the renter to pay the rent to the municipality. Just curious if anyone has ever been successful with this provision. I've heard it's good in theory, but maybe not so much in practice, but interesting to hear if you have had success. All right, and then tax agreements. Lucien alluded to this in the chat. The municipality may enter into a tax agreement with the owner of a property at any time prior to the public auction to pay off the arrears over a period of up to 3 years. While Section 418 sets out some general parameters with respect to the timeline of that agreement, a municipality should really have a policy in place that sets out more specifically how and when a municipality will enter into an agreement. So this ensures consistent treatment of all owners in arrears. If the municipality is willing to allow for this option, perhaps this can be included in the notification letter as well. And of course, an agreement ends when the term has expired or when it is breached by an owner missing a scheduled payment. So there are no provisions for second chances or third or fourth or fifth chances we sometimes hear about. There's no provisions for that in the MGA. If the agreement is breached, the tax recovery process resumes where it left off. So your agreement should specifically state that. And I've already mentioned this section a few times, but 415 states all tax arrears must be paid by the following March 31st. Again, the amount that someone will have to pay is going to change throughout that whole 4-year process as well. As tax arrears are paid in full, the properties can be struck from the auction list. Additionally, a request must be sent to the registrar at Land Titles to have the notification removed. The form can be found on Service Alberta's website on the Land Titles Procedure Manual page. And just remember to ensure that you wait for payments to clear the bank before you remove the notification, so that you don't end up having to start the whole process over again if someone should happen to pay with a lovely NSF check. Also, it's a good idea to run your tax recovery list every month and even more frequently when you get into March and around your sale date, so your file notification reconciliation stays current. All right, any questions on that so far? So let's look at the timelines involved with proceeding to the public auction. So for this upcoming cycle, if the 2024 and 2025 tax arrears remain unpaid by March 31st of 2026, then the municipality must start preparations for a public auction. Notice that I just used the word must instead of the word may. There is no discretion here. So our suggestion would be to develop your calendar starting with the proposed sale date set by administration and then working backwards to build in all the required notification and advertising timelines. Again, for the properties added to the list in 26, the auction must be held between April 1st of 2027 and March 31st of 28. If the municipality doesn't conduct the auction within this 1-year window, an extension from the minister could be requested or should be requested to conduct it at a later date. Information needed to make such a request is available in the tax recovery guide. So after the date has been set by administration, council is required to set the reserve bids and the conditions of sale by resolution. These conditions vary between municipalities, but they could include cash only or a certain percentage down and total payment by a certain date. And there may be other examples of conditions that municipalities may want to set. Again, it may be beneficial to have a policy in place to deal with these conditions so they remain consistent from year to year. So what information does council need in order to set the reserve bids? The assessor or an independent qualified appraiser should conduct market valuations on all the properties that are going for sale. This should be done as close to the sale date as possible in order to capture true market value. This is quite an important step that shouldn't be missed in mitigating risk to a municipality if a property is sold below market value. So if this happens, the risk involves an owner initiating a legal challenge, which could result in the courts ordering the municipality to make up the difference between the actual market value and the price the property sold for at auction. It's not something you would want to get involved with if at all possible. Section 421 sets out the requirements for advertising a public auction. It's important to note that if you have an advertising bylaw under section 606.1, you can't use it to modify these requirements in any way. You're limited to sticking to exactly what's laid out in section 421. So an ad has to appear in the Alberta Gazette not less than 40 days and not more than 90 days prior to the auction date. You want to make sure to allow time for submission and publication, as the Gazette is only published twice a month. Also, make sure you give yourself more than the minimum 40 days to allow for any unforeseen circumstances. The ad must also appear in a newspaper having general circulation in the municipality, not less than 10 days and not more than 20 days from the date of the auction. You must send a copy of the Gazette ad to the owner and any parties that have an interest in the property. So anyone who's listed on the certificate of title, not less than 4 weeks prior to auction. And hopefully that stimulates payments so the auction doesn't have to happen. We sometimes get questions about whether placing this ad in a local newspaper that has gone totally digital would meet this requirement. Is anyone affected by that? Papers no longer are in hard copy and they just switch to virtual, or Yeah, digital. So I'm sorry to say that the answer to the question of if that meets the requirements really depends on the risk of being challenged. If you place an ad in a digital newspaper, and only a lawyer can help you assess that risk. Also, there's currently no provision for a public auction to be held virtually. Maybe another question for your legal advisor is we sometimes hear of some municipalities wanting to use virtual auctions, but it's not specifically addressed by the MGA. Another question we often get is what if the registered owner is deceased? We get asked what extra measures can be taken to find and notify the executor or family members. So it's important to ensure you're dealing with the correct person or persons concerning the estate. Especially in small communities, municipal staff may have firsthand knowledge of the family members of the deceased owner. Again, I'm going to use the P word. You may want to consider a policy to deal with this in order to ensure all property owners are treated consistently, fairly, and in accordance with the new Access to Information and Protection of Privacy legislation. Thanks for that comment or question, Nick. I think that this is on the radar to maybe consider adding something about advertising for public auctions, because it is becoming more common. All right, so holding the auction. Sorry, that. So we get a lot of questions about who can be the auctioneer for a public auction. So for taxes related to land in Division 8, there is no need to hire a qualified or certified auctioneer, so the CAO can typically conduct the auction. However, for DMHs and taxes not related to land in Divisions 8.1 and 9, we have become aware of a requirement to hire a qualified auctioneer, not under the MGA, but under, I believe, the Consumer Protection Act. Actually, for DMHs, this legislation is not 100% crystal clear, but that a certified auctioneer is required. But our messaging would be to play it safe and use an auctioneer for DMHs. This legislation also says that a certified auctioneer must be the one that does the advertising for auctions involving goods and DMHs. So that's something else you may want to look into further and perhaps amend your policy or process. We're not going to get into the whole lot of detail in this session about holding the auction, but just wanted to mention a couple of things quickly. Remember to start the auction by listing all the rules. So the method of bidding, acceptable payment, conduct, what happens at the close of auction, etc. So it's a good idea to have a procedure and even a script written up for this. And the tax recovery guide has some additional information on this in an appendix near the end. So introduce each property and provide full disclosure. Is someone still living in the property? Is there some type of known contamination? Is it vacant but still full of the owner's personal possessions? These types of things could affect a potential buyer's decision, so making these details known could possibly mitigate risk to the municipality. Sometimes there are good reasons for postponing or adjourning a scheduled auction. Maybe the arrears were paid the day before, but the check hasn't cleared yet. Maybe you missed getting the ad into the paper to meet the requirements. Or maybe an estate is very close to being settled. So Section 422 allows an auction to be adjourned to within 60 days of the advertised date. The notice advising of the adjournment must show the new auction date. If the owners of all the properties on the list come in to pay their arrears, a notice would be posted canceling the auction. So if you're adjourning, you're not having to re-advertise. That's a typical question we get. As long as it's within those 60 days, you can just rely on the previous advertising. And then the last point is prohibited buying and bidding. There are some restrictions on who can bid on or buy a property at an auction. Section 429 restricts the auctioneer, councillors, the CAO, and the employees of the municipality from bidding on or acting as an agent for someone else in buying the property. However, a designated officer or employee can be directed by a council resolution to bid on or buy a parcel of land for the municipality if it wishes to become the owner. All right, any questions on that? All right, so let's take a look at what must happen if someone buys a property at public auction. So if it is sold, the municipality will submit a transfer of title by submitting a notification of sale by public auction form and an affidavit of value form to land titles. The property is considered to be free and clear of all liens except for certain encumbrances listed in section 423 sub 1, things like certain registered easements through land titles, CRA issues, utility liens, etc. And hopefully those things would have been disclosed before the property is auctioned, so there are no surprises for interested buyers. Section 427 sets out that all proceeds must be deposited into a separate account for each property sold. It also outlines the order in which costs or expenses get paid before any surplus is distributed. So first is any remedial costs, then the tax arrears, then lawful municipal expenses such as legal fees or land title fees, then charges owing to the Crown under 553, such as unpaid utilities charges or charges to extinguish a fire, etc. And then finally, an administration fee of 5% of the amount paid. This also makes it easier to track all of the costs for whatever expenses need to be paid. So the municipality must notify the previous owner if there are surplus proceeds after the sale, and if the municipality is satisfied there are no other debts, it may pay out the surplus funds. If they're not satisfied, or if there are any types of complexities with the file, then section 428 outlines that the distribution of the sale proceeds through the must go through the courts, so that any person that feels they are entitled to part of the surplus money may apply for it using this provision. In this case, the municipality is required to hold the funds in trust for 10 years. Probably the more typical scenario is that the property doesn't sell at auction. So what options does the municipality have if no one was interested in buying the property? So first one is the municipality can purchase the property outright. Perhaps it's a property that would benefit the municipality by owning for whatever reason. Maybe there's some specific use lined up for a property that can benefit the municipality in some way. Maybe it's next to a municipal building and could be used as a parking lot, for example. If the municipality buys the property outright, the same rules apply as if it was sold to a private individual at the auction. So the title is transferred through land titles, a separate account is made for the proceeds and expenses, and any surplus must be paid out to the previous owner. Another option is that the municipality may take title, retaining the tax forfeiture clause. This means the municipality must protect the previous owner's interest for up to 15 years. And once those 15 years have expired, the municipality becomes the owner free and clear. But during this time, the municipality may sell, grant a lease, license, or permit in respect of it. Yeah, those are your two options there. Sell, grant a lease, license, or permit in respect of it. If the municipality sells it or leases it, the proceeds must still be deposited into a separate bank account. Some things to think about in this scenario. What if someone's personal belongings remain on the property? What if renters or owners continue living on the property? What maintenance needs to be done with the property to prevent it from deteriorating and gradually losing value? What does taking possession of the property mean? Changing locks, getting insurance coverage maybe, paying the utility bills, that type of thing. So lots to consider here. If a municipality takes tax forfeiture title, the property is treated as tax exempt. Should penalties still be incurred on the outstanding arrears as they should technically be aged accordingly, but this may be challenging to carry out depending on the system you use for aging penalties. And the third and final option is to do nothing. This option does not start the clock for the 15 years as it does in option 2. It remains accessible and still accumulates taxes. So why would a municipality do nothing? There could be a number of reasons, such as environmental contaminations, for example. You might be thinking that this slide is a bit skimpy on how a municipality determines which option would be the best course of action, but really there are usually unique circumstances associated with each property. Often it's best to have your legal counsel thoroughly review the file and provide their qualified opinion on what option would make the most sense for the municipality, and also mitigate any potential risk as much as possible. All right, any thoughts on that or questions? If you call us and ask us what you should do, which option you should take, unfortunately, we have to refer you to your legal folks. All right, so here I think I just have a summary of the steps, and there's a little bit of an activity in the handouts related to this to put the right steps in order. Yeah, it's just a summary of the first part of the process and then a summary when it comes to the auction. Administration setting the auction date and figuring all the timelines, and then council setting the reserve bid, the advertising, adjournment possibility, and then what happens if it's sold or not sold. All right, so that takes care of the land portion. Now we switch to the DMHs. And I have the reference to how a DMH is defined. So manufactured home, mobile home, modular home, or travel trailer. And that's in section 284. So again, when we're dealing with DMHs, this applies to DMHs situated in mobile home parks or where the owner of the DMH does not own the land on which it is situated. In other cases where the owner of the DMH owns the land on which it is situated, the DMH would be considered an improvement and taxed in the same way as would a property with a house. So tax recovery for DMHs is very similar to tax recovery for land, as in taxes that are more than 1 year in arrears must be put on the arrears list. If your municipality chooses to use this method instead of the one used for property tax recovery not related to land, then the municipality needs to make 2 major policy decisions. So first, in this method, a DMH may also be added to the list if it is less than 1 year in arrears per section 436.03. This is a policy decision made by the municipality, and the policy should outline the circumstances required by the municipality to take this action, such as when does administration add the DMH to the list? Are all DMHs treated in the same way every year? And if no such policy decision is made, then the default timeline is the same as tax recovery related to land, which is the 2 years. Another policy decision that can be made is whether the municipality wishes to make the mobile home community owner responsible for the taxes for all the DMHs within it. And then that cost would then be passed along to each DMH owner, most likely through increasing the lot rent. Some municipalities have found that this greatly improves their tax collection rates, even though it can be a controversial decision. especially from the perspective of park owners. And this is the second spot in the handouts where I've made a bit of a typo with the section number. So I've highlighted now on the slide, those are the correct references. It's section 304 sub 1, not point 1. So sorry about that. So the first one allows council to pass a bylaw to put this policy decision in effect to make the park owner the assessed person for the taxes. This bylaw requires advertising and possibly a public hearing, I can't remember offhand, and can't be put into effect until at least a year after it's passed. Another subsection is 304(1)K, which is the ability to pass a bylaw saying the DMH owners are responsible for the tax for DMHs located on a parcel of land and not in a mobile home community. So those are the two references there for policy decisions for the assessed person. So tax recovery for DMHs is very similar to tax recovery related to land, but there are a few primary differences, those being number one, how the municipality registers its interest, number two, the advertising particulars, and number three, I mentioned it a bit earlier, but the use of a licensed or certified auctioneer. So in this method, you will need to build an arrears list as well, but first you need to determine whether the property qualifies to be on the list. Prior to creating the tax arrears list for DMHs, the municipality must obtain the serial numbers for each one. So your assessor should be able to provide this number, but a designated officer may also enter the property to get that information. If you can't obtain the serial number, you need to contact the Modular Housing Association, Prairie Provinces, and they will assign a new serial number upon completion of the appropriate request form. You'll also need the year, make, and model of each DMH. And I believe there's a template in the tax recovery guide for a tax arrears list for DMHs. Then the municipality must fill out a financing statement for each DMH and file each statement with a registry agent to apply the tax recovery lien on the DMH, also known as a statutory charge at the registry's office. So these forms are available on Service Alberta's website as well. This is what will formally register the municipality's interest in the DMH as compared to the property tax notification that is used for land. The tax recovery guide includes much more detail on the forms and processes involving registering these liens. Again, it's a good idea to send a letter 4 to 6 weeks before developing the arrears list to the affected DMH owners, advising tax recovery proceedings will be started unless the tax arrears are paid. So a copy of the arrears list for tax recovery related to DMHs must be posted in a place that is accessible to the general public during regular business hours, which is generally the municipal office. Again, as the full payment of tax arrears are made, properties for DMHs may be struck from the list. So this list does not need to be sent anywhere else as compared to land. Once the tax recovery lien is registered, the municipality must send a letter to notify the owner that a lien has been placed on the property, a letter to the park owner, and a letter to each person who has an interest registered against the DMH, and that has to happen by August 1st. You will be required to conduct a search of the personal property registry in order to determine if there are any other parties that have a registered interest. There's also provision for tax agreements, same idea here as for land. And if the DMH is rented, again, the same process for the municipality to collect the rent, but notice must be also sent to the park owner as well as the owner of the DMH. All right. If the tax arrears remain unpaid by the next March 31st, then the municipality must start preparations for a tax sale. So this is quite similar to what I laid out for land. Again, building your calendar based on the sale date. Remember, you have from March 31st to April 1st to conduct the auctions. And you can arrange to have auctions for both land and DMHs at the same time. It's a little bit tricky for your advertising a little bit, but it can be done. So first, administration sets the auction date and determines timelines for advertising. Again, council needs to pass a resolution to set the reserve bids and conditions for sale. That's the same. No need to advertise in the Gazette for this method, but you need to advertise in a paper not less than 10 days and not more than 30 days before the auction. So you would send a copy of that ad to the owner, the park owner, and interested parties not less than 4 weeks before the auction. Then holding the auctions, same as land, basically. But unlike land, as I had mentioned earlier, you may or may not need a licensed auctioneer under the Consumer Protection Act. So we recommend playing it safe to mitigate any risk of a challenge and to use an auctioneer. All right, and there's also provision for adjournment of an auction to within 60 days of the advertised date, same as for land, allowing the check to clear, settlement of estates, things like that. And the notice of the adjournment must show the new auction date. Same rules apply for prohibited bidding and buying as they do for land. So if the DMH sells, the municipality will issue a bill of sale and discharge the tax recovery lien and other claims by registering a financing change statement with a registry agent. And then if it's sold, the municipality must pay in order of priority the tax arrears, any lawful expenses related to the process, and an administration fee of 5%. Again, you would notify and pay the previous owner any funds remaining after the sale. And if you're not satisfied that you're aware of all the encumbrances, you would notify the owner. They may apply to the courts for the remainder within 5 years. If no claim is made, then the municipality can use the money for its own purposes. And if it's not sold, the municipality may sell it, purchase it, or grant a lease in respect of it under 436.15. When disposing of an unsold DMH, the municipality is obligated to sell it at a price as close as reasonably possible to the market value. Options regarding the sale include direct sale, sale by tender, or sale through a real estate agent. After 10 years, the municipality becomes the owner, free and clear of encumbrances. All right, so kind of say the same, but a bit different for these provisions. And that's captured in the table. So what if someone pulls up stakes and moves their DMH to another municipality? Maybe this is more likely to happen in the dark of night. If the DMH is moved to or its site becomes part of another municipality, the other municipality must continue the tax recovery proceedings. The designated officer of the receiving municipality should ensure that a financing change statement is registered to list the new municipality as the secured party. And the new municipality must continue with the proceedings, and if they receive sufficient funds, they must provide the original municipality with costs they incurred in connection with the tax recovery proceedings for the DMH. Not sure how often this happens, but there are provisions for that. And then a little bit about reporting. A manufactured home community must provide monthly reports to the CAO on ownership, including serial numbers for the units in and out and in and out movement of those units. So the frequency of these reports can be changed by bylaw, but this cannot be made more often than once a month. Also hear that that's a bit of a challenging process to manage. All right, so just a summary of the timeline for DMHs, and if you add your DMHs to the arrears list after less than 1 year of arrears, this won't help you much. This is strictly for the default for the 2 years. So it looks quite similar to land in that respect, unless you use that other policy for 1 year. And then a summary of the auction pieces. All right, and you have this in your handout as well. This is a chart that breaks down the similarities and differences between the methods. So it's for easy reference, just to understand the differences and the similarities. And then there is a second slide summarizing that. We say to be safe and get a certified auctioneer if you're auctioning DMHs. Instead of getting a legal advice, whether or not you need to do it, the safer thing or the easier way is just to do it. So we do have some resources you can always turn to if you have any questions. Please reach out to us if you have any, if we didn't answer a question or if you want to chat about something offline, you can give us a call or you can shoot us an email. Make sure you have it's a bit newer email address for our advisory group. So make sure you have that right in your contact list. I did include the guide to special liens. If you haven't taken a look at that, it's a good read. It has lots of, I think it even has information on the process in general, not just the designated industrial property or that Division 9 stuff. There's some good information in there. And I'll ask Lucian to put a link in the chat for an evaluation survey. Okay, we do have some time. If you have any concerns or any questions you wanted to chat about.